zoom out. Always zoom out. And look at the long-term log chart. Sell-off like this, things start to look pretty cheap compared to their long-term trend. So maybe this is a more interesting opportunity, as opposed to be freaking out thinking, oh my God, what's happening? If it goes down another 20% from here, does it really change the story? No. I think there's a number of factors at play. I think the main factor is if you think of the marginal investor in Bitcoin, the average person, the adoption, those people have seen prices rise 10% in terms of their everyday cost of living, but the wages haven't gone up that much. So what you've taken is marginal consumption away, or their ability to invest, stick a few more dollars into Bitcoin. That has left the market. We've seen network growth slow down. The other thing that happened was obviously the Chinese left the market. And so that's left the market in a slightly less stable way because you've taken out a whole bunch of demand. Now, there are plenty of Chinese still in the market, but you took out a lot of that. So with those two factors, and then kind of the overall sort of fear of the tightening of monetary policy and what that could do to other financial markets, if you think there's new participants in this now, there's people like hedge funds. And if they're, one portfolio is blowing up, they end up having to reduce risk elsewhere. So everything starts becoming a bit correlated. So I think those were the primary drivers behind what's been going on.
Ethereum in 2022, what are your thoughts?
My guess, I still think higher. I still think we actually got a strong run to come. I think this kind of year-long sideways correction that we've essentially had is just a springing board to further gains as more adoption rolls out, more use cases roll out, etc. I still think risk-adjusted, ETH will do extremely well over time, just because the reason why it's expensive to use is because it's so damn popular. It's like a chain of prestige now for things to be built on, because it is the more decentralized of all of the other layer ones. So it makes sense to me. I think with the change towards ETH 2.0 coming as well, I think that narrative will build over time as well. So I still think the upside in ETH is massive in terms of market cap. Where could it go? It can go another 10x from here in terms of market cap alone. Over what period of time? Who knows?
Do you think Ethereum will flip Bitcoin in 2022, or do you think it'll flip Bitcoin ever?
Yeah, I think it will. Whether it's 2022 or not, don't really have a strong view. My guess is probably. And again, that shouldn't be taken as, oh, ETH's better than Bitcoin. It's like comparing Apple's market cap with Tesla's market cap. They're just two entirely different things, and that's okay.
Like, what makes it different?
So the other layer ones may well outperform, but you have more risk in them. So we've seen, for example, Solana got tested over this recent sell-off, and the chain's still a bit clunky. It has its own set of problems. And all of these come with different sets of problems. But in the right market, because they're seeing earlier adoption, the rate of change goes up faster. From going from 1 billion to 2 billion is much easier than going from 10 billion to 20 billion or 300 billion to 600 billion. So rate of change terms, they can perform very well, but they're riskier. So ETH has that balance of being more risky than Bitcoin because it's less decentralized, we talked about before, less pure, but it still has the massive network adoption that we're looking for, which is the thing that drives prices. And network adoption is just not people buying it, it's people using it and applications being built on it. It's how you connect all the people on the network. And ETH is still far superior than anything else, but these others are coming up from a lower base. So it's that balance of risk reward. I mean, there will be lots of times you'll have FOMO if you own ETH because something else will do a lot better. Now, that's what the Bitcoin investors will say too is, okay, fine, other chains may outperform, but we're happy with the security and the safety of owning Bitcoin, and that's fine too. There's always a risk curve somewhere across all financial markets.
How much do you think hedge funds affect the cryptocurrency markets in 2022?
So there are two types of hedge funds operating in this market. Crypto hedge funds, pure crypto hedge funds, of which there's only a few big ones. I know because I've just started a crypto fund of hedge funds. So I invest for investors in a kind of broad portfolio of crypto hedge funds. So that space, there's about $6 to $7 billion only. It's still so small considering the hedge fund space overall is like 3 trillion. So it's really small. So they don't influence markets that much. Then there's the traditional hedge funds who've started moving into the space, and they tend to be more flighty in how they approach it. So you may be a portfolio manager who can trade currencies and bonds and also crypto. So you manage that volatility like we talked about before. If you have to reduce risk, you'll end up selling your crypto. So there's a bit of that change of dynamic, but there's a lot of big hedge funds who are also setting up entire crypto units. The thing is, there's not enough money in the secondary market, i.e. in these trading vehicles like hedge funds, to affect price because the space is moving so fast. There's so many tokens. There's so much complexity to DeFi. There's now NFTs on top of it. There's basically endless alpha. So those guys won't arbitrage away the prices. It can change how the markets trade a bit because they'll hedge with futures contracts, they'll do other stuff, but they're not big enough to drive these markets. So it's still really interesting. They're still just a participant like the rest of us. And it's same with the institutions. Yes, sure, you might see a big buy order because somebody's started putting it on their balance sheet or putting it into their fund. But generally, it's not the same as financial markets where investment banks, asset management firms, hedge funds can truly influence price. If it is in crypto, it's still whales because they kind of know their way around market manipulation in terms of, causing spike lower, spikes higher to force liquidity. Just understanding risk, right? Hedge funds don't think this token is going to make me rich. They're going to think, okay, like I talked about before, what's riskier here? How do I want to construct a portfolio so I can be in this for the time horizon I want to be in? So maybe I'm thinking, firstly, I want to be in this space for the next 5 years. I think that Bitcoin and ETH are the two best bets for that. So I'm going to put that in my 5-year portfolio bucket and don't touch it. Then I want to have this medium-term bucket where I want to get involved in some of the rotations going on, some of the new developments, and maybe I don't know which protocol is going to work. So I want to think about, how do I risk adjust that? Do I have an equally weighted basket that we talked about before? Or do I say, listen, I'm more interested in DeFi. I'm going to put 10% of my portfolio in DeFi, 5% in NFTs, 20% in layer ones, that kind of thing. And then look at your overall risk of the portfolio. People tend to concentrate when they shouldn't do because they see people like me saying I'm irresponsibly long Bitcoin or ETH. And they think, well, that's the easy way. But that's come from a distillation of all my macro views, 30 years of experience, knowing when is the right time to take the risk. And you can be wrong. So I set it up that I can be wrong and not lose my house. But other people don't do that. So it always feels like, well, I'm never going to make as much money. You will over time. So I think portfolio construction and risk management is what hedge funds just do better. And they also better at reading market sentiment as opposed to being the market sentiment. And the crypto market, everyone's so busy freaking out or emotional. When Bitcoin was hitting new highs, everyone posting every $1,000 up with a new price. It's like, guys, stop this. Hedge funds don't do that. You have to be less emotional about your money and more thoughtful about what you're trying to achieve. It's a hard question because I would be saying, if you're 25 and it's $10,000, you can up and it won't change your life. But if you get it right, it'll change your life. Now, so that says, okay, let's take some risk. The issue is where? It's really hard to know, as we talked about, with all of the developments in, let's say, layer ones, what's really going to get the traction for the next phase here? I don't know. Is it going to be NFTs? Well, you really have to know what you're doing. And maybe you should spend the time. You probably need to put your 1,000 hours in to start just figuring out, okay, what is my specialization? Where do I think I can understand the market better? And then take a bet accordingly. I don't see one clear opportunity. As I said, you could choose ETH, but maybe that's not as risky as you really want it to be because you want to look for the 100Xs. That requires work, requires Discord channels, knowing who's in the community, following what people like Delphi Digital are up to, the real thought leaders in the space. It's not a straightforward answer, but the opportunity is there. And I think it's all about becoming a specialist in something and not trying to be a generalist. And don't just choose one protocol or one token itself. Choose a range or a particular area that you think you understand, learn everything about it, and then decide where to take that risk and where the good bets can lie. So maybe it's DeFi that you're interested in. Then you can look at, okay, what's something really new and upcoming that you think might be groundbreaking and it's got some amazing investors in it. Okay, maybe you take a position in that, but also in Aave, as a balance to your portfolio to make sure that you don't screw it up by just taking too much risk in one go and getting it wrong on one single bet. One bet that's obvious to me that's coming, in fact, there's two bets that I've starting to think about. One is a resurgence of DeFi because, institutions, hedge funds, everybody's looking at this space and it's probably the fastest innovating space in all of crypto. So I think there lies a big opportunity. The other opportunity that's pretty overlooked is interoperability. So the way of moving assets cross chains. So that's a really interesting area for somebody to get to know because if we're right about the metaverse, we said part of the key functionality is pick up a shit up here and move it over there, right? If that's Ethereum and that's Solana, we need to solve that. Same with digital identity that needs to move across everywhere and be applicable everywhere, not just in your ETH wallet. So I think those two things feel like they haven't pumped recently and probably deserve the market's attention at some point. I think that social tokens, and I've talked about this, I think even with you guys before, is social tokens are still not on people's radar screens. They don't really understand it. Zoom out. Always zoom out. If we're looking at this as a 10 or 20 year trend of an emerging technology that's being adopted at record rates, zoom out of the noise of Twitter or Reddit or wherever you hang out and look at the long-term log chart and say, is this price action meaningful or not. It will give you a much better understanding of allocating your assets. You know, a sell-off like this, things start to look pretty cheap compared to their long-term trend. So maybe this is a more interesting opportunity as opposed to be freaking out thinking, oh my God, what's happening? You know, if it goes down another 20% from here, does it really change the story? No. So zooming out is the most powerful tool you can have, and filtering out the noise. Writing down your own framework is really useful. Why am I investing in this space? What do I think is going to happen, knowing that none of us actually know? And then testing that all the time. Has that changed my hypothesis or not? That's really useful because it stops you doing stupid stuff. And we all do it. Emotion takes over and you forget the reason you did something in the first place. And you know, you buy a token, it collapses. You think, oh God, I just want to clear it out of my portfolio because it pains me every day to look at it. But when you put it on, you said, I want to hold this for 10 years. Well, then hold it for 10 years. And if you can't, then you sized it wrong. So you made it too big a part of your portfolio to hold for 10 years. It's just writing down some of those principles will help people out immensely.